All right. Hello, everyone. Welcome back to Not Financial Advice. Today, we're going to be doing a quick review and DCF of BTI, or British American Tobacco. So, this is a several hundred-year-old tobacco company. In today's day and age, they're going to be most known for Newport cigarettes as well as Lucky Strike cigarettes. So, they have a portfolio that is attractive to a wide range of consumers. And they're also getting into the heated, not burnt tobacco uh, business industry, which is essentially a vaporizer for tobacco, which U.S. government regulators have deemed as less harmful. But predominantly, I believe they're going to be in cigarettes. A British owned company with a lot of revenue from all parts of the world, including the United States, and also developed in international emerging markets. So, taking a look at BTI and thinking about the fair value of the stock, let's first take a quick peek at the price so we can see that current price is $33, and we've got a drawdown right now from all-time highs of about just less than 55%. So the question is this an attractive entry price? Coming back over to Qualtrum, more information on Qualtrum. It's a suite of software that I utilize and that I pay for, although I have no affiliation with Qualtrum. And I'll leave a link in the description below if you're interested in getting access to this great software for yourself. Um, while we're at it, make sure to like, comment, subscribe, and turn on bell post notifications. But let's jump right in and look at um, some of the ratios on this stock. So, market cap. This is going to be a large, either large value or large blend market cap company. We see a current PE of about 7, forward PE of about 8. So this is trading at essentially less than a commodity multiple. So it's quite cheap on a PE basis. Definitely gets one's attention. Free cash flow yield is huge, 13.25%, or 13.1% stock base adjusted yield. Cash on hand, 4 billion. Debt, huge amounts of debt at $38 billion. Very, very, very high starting yield. This number would make me nervous usually, but I see the PE ratio, or the payout ratio, is not only less than 60, but also less than 50. And this high yield is going to be due to that 55-60% drawdown in price. So seemingly a safe dividend. So let's start off with revenue growth and see if it's growing top line. We always need that. So this is going to be revenue growth on an annual basis. It's up and to the right. Cigarette usage is declining, but tobacco is a pretty defensive and inflation resistant deal. So just like other tobacco companies, they may have volumes declining most likely, but are passing through higher prices. So while less people smoke, people who do smoke are now paying a higher cost per pack. And so this is how we're seeing this revenue growth. Based on these numbers, I've made some conservative assumptions about future growth, but let's just note that growth in the last 5 years has been about 6.4% per annum. Last 2 years has been about 3.5% per annum. So revenue is up and to the right. That's a check mark. Free cash flow. We're going to look on a stock base adjusted free cash flow metric, and we can see that free cash flow is up and to the right. And there's been a big jump here. So this is probably going to be some type of acquisition, possibly. They may have purchased another company, which might explain some of their debt. But we can see even prior to that, going back to, say, 2013, they were at 3.6. 2017, they're at 4.2. So they have some more likely organic as well as inorganic growth, and it's going up and to the right. So that definitely checks the box there. We need to take a look at shares outstanding. That's going to be part of our DCF we're about to run here in a few moments. They've definitely issued additional shares in the past and then bought them down, and then they issue more. So overall, pretty flat, but there's some slight dilution here. Don't love that. I don't think it's the end of the world at those levels. Let's see if they're able to reinvest either Are equity dollars or debt issued? Let's see if they're able to reinvest capital employed at an efficient metric. So their ROCE is not the best. So it looks like their organic growth, they were starting to get lower and lower and lower returns. That might have been what potentially drove them to do an acquisition, although I have not dug deep enough to see if that's what happened. It's just what it appears to be to me. And so now, this is a company that's very much so matured, and will not be on an upward slope most likely. So not great profitability metrics, not the worst though. And they look kind of steady. So let's take a peek at anything else we need to see. No real data on insider buyer, insider buys or sells. So based on all of the stuff that we've looked at here, I do have our discounted cash flow valuation coming up. So the stock is currently trading at $33, about 55% off of its all-time highs at a low 6 or 7 PE ratio. So now let's go ahead. That's the price is $33. Let's take a look at the value. And we'll just go back and look at the assumptions. A little bit of a spoiler alert there. Hopefully you missed it. So let's take a look at the assumption. So based on everything that we saw over on Qualtrim, we did make our assumptions. Okay. So looking over on the left-hand part of the screen, so making sure everything is neat and organized for you. Do like, comment, share, subscribe, bell, post notifications on. But we averaged out their free cash flow on a stock-based compensation adjusted basis. Average free cash flow over the last 5 years is over $9 billion a year. Cash on hand is $4.1 billion. Total debt is $37 billion. Large amounts of debt there. Shares outstanding looks like 2.3 billion. And for growth rates have done 4% over the next 5 years, down to 2.5%, down to a terminal multiple of 1.25, and a discount rate of 10%. Current stock price 33. My estimated value is 38 or 39. So it looks like this stock is somewhat to moderately undervalued. It's something that I have exposure to through international ETFs, predominantly SCHY. It's going to be a top 5 or 10 holding there. I'd be tempted to open a position in this company, but I think that with the downslope of tobacco, and for other reasons, I'd like to keep my exposure to it through my international ETF holdings, SCHY, large value. So that's our review. If there's any stocks that you'd like for me to take a peek at and do a guesstimate of their fair value, just drop that 3 symbol ticker down in the comments below, and we'll see you on the next one. All right. Thanks a whole lot. Bye now.